Hello, this is Carlos Asilis from Glovista Investments, here to share our market outlook for the week of January the 11th. First, a brief recap of the week that just ended. It truly was a momentous week, both at the macro as well as political level, with major developments transpiring in the nation's capital. These dynamics were manifested in the market. The first session of the year was a significantly negative one in terms of risk indices, followed by very strong recovery, culminating with very strong weekly performances for major risk assets, including, for example, emerging markets and U.S. small cap indices were up close to 6% for the week. Those were the two leading groups, followed by the S&P 500, which was up a little less than 2% for the week, with the technology sector lagging. Also, in terms of the style divide, we did see value sector stocks outperforming marginally growth sector stocks. In terms of macro developments for the week that just ended, the soft calendar, if you will, was more constructive than the hard macro calendar. Specifically, a number of business sentiment diffusion indices were stronger than expected by the consensus, while the hard macro calendar, particularly U.S. employment numbers for the month of December, were considerably weaker than expected. And there were other indicators that also manifested a certain level of weakness. Now, other events and other qualitative developments that transpired during the week provided additional support for the very strong performance that we saw by the end of the week. In particular, the the ratification of the Biden-Harris presidency did unfold, following a lot of volatility in the nation's capital. Secondly, Mr. Biden essentially voiced his administration's commitment in putting forth significant amount of fiscal stimulus. As a result of all this, U.S. economists' projections for growth for the U.S. economy in 2021 have been raised considerably to around 6% for the year, which is a number that we very much share. As we look forward to the week that is about to begin, there are a number of releases scheduled, particularly covering the activity space, U.S. industrial production, U.S. retail sales, also similar for China, as well as University of Michigan consumer sentiment indicator, and also a number of corporate earnings out of the U.S. In terms of what we expect for the market this week, we expect this rotation into international, particularly emerging market equities, to continue. There's been very significant breakouts that have been confirmed this past week, and investors, as we've been discussing, are significantly underweight the emerging market equities asset class. All of these dynamics are also reinforced on the macro and fixed income space by a significant pickup in inflation expectations this past week, which was also manifested in a breakout of U.S. Treasury yields above 1%. So we think that rotation into a reflationary growth acceleration phase, despite the second wave of the virus, is likely to be sustained over the coming weeks. Thank you and have a good rest of the week.